Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is October 17th, 2025. S&P 500 currently sitting at 6627. I'm David Zarling. I'm here with Ian McMillan. Ian, do you think there'll ever be a day where we're not using S&P 500 as our marker, an update marker for the podcast? Like, wouldn't it be nice? Wouldn't it be nice if there was like, we're marking out Russell 2000 or something?
How long would it take, right? So I assume if we had started this podcast in the late 80s,
okay,
that we would get on here and you would quote the Dow.
Yeah, good point. Probably
so
quoting the Dow.
What point would it have changed? How? Because right, that would take years of being like, okay, well, I guess no one just cares about the S&P anymore. Why are we doing this? That would take a long time.
Yeah, no, I think that's a fair, and what I find fascinating about what you just said is look at, now I don't know how accurate this chart would be, right? Because the S&P 500 is invented in 1957. The Dow Jones goes back to the 1890s, but look at a monthly chart of S&P versus Dow Jones and zoom all the way out.
All right,
monthly S&P versus Dow Jones. I'm using SPX DJI on TradingView.
Yeah.
Just an interesting spot where we're at right now.
Man, what if we go back to quoting the Dow for 20 years?
That'd be crazy.
Will we have a podcast? Our podcast now will be like holograms.
Yeah, holograms, or just
if we had video, we could keep a little ticker at the bottom.
Yeah, maybe we should do video. Better listeners would love that.
They say they want it. I wonder what all that entails.
Yeah, we'll have to figure that out.
And then the editing, yeah, we'd have to, because then we could share charts.
Right. But I digress. I just find it interesting. There could be a day where we're not using the S&P 500 as our marker, right? Because it is the most probably looked at index in the world. You can talk NASDAQ, but NASDAQ's so tech weighted, and
yeah,
I know the S&P 500 is too. I'm not sitting here saying that, but here we are, S&P 500, 6617, and we've got an inside week so far.
I don't know, man. Just feels kind of lethargic. I'm sure I used that word last week.
Yeah, there's some
that
lethargy, and last week being a bearish engulfing, meaning opening price of the S&P 500 and the closing price engulfed the prior week's opening and closing. S&P down 2.4% last week. We're sitting inside of that range, right? That close last week was 65.52, and the price movement this week is inside of that candle. We've got a volatility measurement such as the VIX touching 28 today. And I know we've covered on this podcast in the past that a general rule of thumb, right? You could take the VIX and divide it by 16. And that kind of gives you what your expected daily volatility for the S&P 500 would be. And that's, getting towards 2% daily moves. And so we don't get to be really surprised by the volatility. I'm not saying it's comfortable.
It's not.
A lot of churning and burning. And I think very interesting to see what's going on with regional banks this week.
Yeah. Hopefully it's a nothing burger. Kind of sketchy. Pretty sketchy, to be honest.
Yeah, regional banks back in, and maybe our listeners remember this, maybe they don't, but in case they don't, February and March of 2023, regional banks were starting to show relative strength, and then they just got slammed.
Yeah, the old Silicon Valley. I think there was another one that went under. Or someone buy. I don't let them go under. They make someone else buy them.
And that that was KRE, the ETF, regional banking ETF, as a proxy that we could use. Got sold really hard in March of 2023, and we got back to that $63, $64 level back here in September of this year. The selling's not quite to the degree that we saw in March of 23, but it is something that has you sit up and take notice. And really, relative speaking, KRE has never exceeded that initial flush from March of 23 on a relative basis. And here we are near the relative lows in the relationship. And when you consider the weighting of regional banks in something like small caps, which I believe is around 10%, it's hard to envision small caps getting much traction here.
Yeah. Yeah, it's a pretty
Without
big bummer
banks.
for the Russell crowd, especially because you had biotech that was starting to work.
Yeah. Well, and that's just it, is like the reason why small caps have been able to hold up like this is biotech. And so you have this dichotomy, right? You kind of want to see regional banks hold up and do just fine, because buying biotech is a risk on feature, but selling financial stocks, not really a great risk on feature. So definitely got two sides of a coin here.
Yeah, and regional banks, never even made it back to their February high. Well, they did make it back to their February highs. They never made it to all-time highs. But you had a lot of the bigger banks, Bank of America, JP Morgan. I know that those are more than just brick and mortar banks with checking and deposit accounts. But yeah, certainly the big banks versus little banks. In fact, if you take KBE versus KRE, probably likely another big move here coming up, it would seem, in favor of the bigger banks.
Yeah, that's a really nice consolidation since April of 2024. It's a good chart, worth noting. Big bank strength versus small bank strength, for sure.
Maybe they're just going to start buying. Maybe we're going to see another swath of regional bank purchase. I don't know.
Yeah, I wish we did. I wish we did know. All we can use is price.
If you paid me to figure that out and know that, I would go figure it out for you, but you don't.
Pay to look at price charts, man.
You do?
If I can use a double meaning, we panned out to look at the big term picture of Dow Jones versus S&P, but using an idiom, is gold going to pan out?
I don't know. I think we've had a really good run. I think you're definitely starting to see some pretty questionable behavior. I've gotten a few texts about gold, things going around on the internet. Seems like there's a big rush to buy physical gold across the world.
And we've had a couple clients bring it up as buying physical gold, wanting to buy gold bars. And clients know that we've held gold or gold miners and client accounts here for a while. But we might be getting close to where is the risk reward still worth it, is the way I would put it.
And I think you have entered a spot this week where if we go higher, you can get back on it. But in a lot of these, where there's gold miners, whether they're Fibonacci retracements, whether they're relative relationships against other assets like the S&P, this would be where I would probably start easing up on that.
Yeah.
And if it goes higher, you can get right back on.
Right.
But
you're just saying that this is a level on a relative basis using gold miners versus S&P, GDX versus S&P, that we've had some resistance in July of 2014, August of 2016, July of 2020. We know that markets have memory. So we're entering that potential spot where you could see some relative weakness and some opportunity cost. I think you bring up a really valid point there. And so it's worth paying attention to. It's worth paying attention to the price action, especially considering some of the sentiment out there that you've highlighted. I mean, even GDX versus GLD, gold miners versus gold, heading into an area where it's been resistance in the past. Doesn't mean it's over, but I think your point, there's been a lot of energy to get up into this spot. And now it's about how does it digest this?
I mean, I would put this in the parabolic category, especially the last two. I mean, I think gold I saw was up 9 or 10 weeks in a row, and these are pretty long. I mean, these are solid candles. It has not been a melt up. Yep. Yes, you're getting into that, and maybe it does keep going. But yeah, I think what is the risk reward here going forward?
Right.
What's kind of standard deviation move have we had over the last 3 months? Is that likely to continue?
Ideal world, we get some consolidation here.
Yeah. Maybe it's another consolidation like we had in June and July.
Mm-hmm.
That would be super healthy. And I think just the overall price action getting pretty weird the last week. The volatility. Yes, VIX spiked, but also, I mean that in the sense of just the day-to-day roller coaster we've had. Obviously, last Friday was a big one. Did get the bounce. I would put it in kind of I don't know. It's hard to say the dead cat category. It wasn't that big of a flush yet. But, yeah, we didn't reclaim a lot of levels. A lot of individual stocks. A lot of the higher beta stuff falling off.
Mm-hmm. Yep. Yeah, on the one hand, you've got high beta biotech, okay, but then when you look at like quantum computing stocks, and I'm not saying that's over, it's just definitely some volatility there worth paying attention to. I mean, even if you look at the high beta, low vol chart, we're still consolidating, again, an inside week after bearish engulfing, which is, it's actually constructive if you think about it, if you're not wanting a steepened price correction, right? You rather have an inside week after bearish engulfing than some type of follow through.
Yeah. We don't need a waterfall.
Don't need a waterfall, especially if you're aggressively invested. Now, that being said, October, notorious for having volatility. Here we are, October, volatility.
Maybe we just got to get through 2 weeks of this. 2 more weeks.
Yeah. I could definitely see that being a case. It is interesting. I saw a chart out there talking about the VIX, and Luke Kawa, hopefully I'm saying his name correctly, that we just had one of 53 days in history of the VIX index above 25 on a day where the S&P 500 closed within 2% of its all-time high. And some previous times for that, late 90s, 2000, 21, and now. Don't think you can extrapolate that necessarily, because I mean, late 90s, if you had used that as some type of signal to get out, you might have missed out on 50%.
I was going to say, well, what if we missed like the last 20%?
Right. So
no, it's definitely, I mean, it's sketchy behavior out there. And I think, we're coming up on the end of the year. I don't know. It's hopefully, and no, I don't like to say hopefully, because that makes it sound like it's part of our process, or that I'm actually sitting around praying that somehow on November 1st, markets magically,
I get what you're saying.
But it could be, yeah. I mean, what, one more flush and we go high? We did that a lot. Then that, I don't know.
Yeah,
why you gotta be, this is why you got to be day by day.
Yes.
I could have so many theories. I have hours of theories. What could happen, but I don't know.
Well, let's do that. Let's talk through some price levels. We've talked breadth in the past. We can touch base there quick. We still have breadth divergences. I believe you covered that bullish percent flip to O's.
Yep.
We have the backdrop of last week's Friday quick selling. You get the AAI bear bull survey out, and bears exceed bulls again. We had a tick up in put call ratio, right? We talked about how we'd be looking at that. Yeah. Not really a big as spike as I thought we might see.
It was. Yeah, I'm with you on that. I thought that I know it was just for a day, but I thought that'd be higher.
So mentally, using the survey results, people 1 foot out the door. Execution wise, I wonder how many times they've gotten their hand bit by trying to short. And so the shorting isn't all that great. So it makes me wonder if there's another flush coming to get that reaction again. And then for me, when I look at the point of control, so looking at volume profile of something like S&P 500 futures, what I find fascinating is from the tariff tantrum low back in April to the flush last week, or the quick selling on Friday last week, the point of control on S&P futures was basically 6,400. The past week of volume, and I find this impressive, has moved that point of control up to almost 6,700. So there's been a lot of volume that's come in.
So we're below the point of control now?
We're below the point of control at 6,700, but above the point of control that was last Friday at 6,400, which tells me a fair amount of volume and buying volume came in after Friday. But yes, below the point of control from that standpoint. So could you see another move down into 6,400 to test those accumulators, those buyers from the April lows to last Friday to see if they're for real? I could absolutely see that.
Yeah.
So for me, that first really important level, to reclaim would be 6,700, but also to provide support would be 6,400. And I think a way to think about that is, if you're invested, you could anticipate, upwards of 4% volatility, meaning like you could have a further correction of 4% and you still have an uptrend on your hands.
Yeah.
But definitely,
I don't want to go to 6,400.
I know. Sadly, the market doesn't care what we think. But I could see a scenario where there's one more leg lower, gets that pull call ratio up. The headlines are super negative. The
Christmases are canceled.
Christmases are canceled. And it's again another time in October where it was time to buy.
Yeah.
But we'll see. Doesn't have to do that. We could stay above Friday's low, which is at about 6,600. We could stay above that. And last Friday was a chance to get involved. Time will tell. Again, it goes back to we're Bayesian, right? We take the most recent data and put it on top, have weighed a little bit more than the data before that. And that's how we think about markets. Still have an uptrend, still could have a leg lower, and that would still be within an uptrend type behavior.
Yeah.
VIX needs to cool off. I will say, VIX being as high as it is, you're going to be paying a pretty penny for any type of hedging at this point.
Yeah. And this is essentially where we got up to, I guess, August 24. We got up to closed at 37. Intraday, we got higher, 65, close to 37. Tariff tantrum, we got up to 60. Well, you've definitely had some other corrections over the past, I'd say 2-3 years where, the 29-30 area is kind of it. And and then we go back lower on VIX and markets dwindle higher.
Mm-hmm.
I can't believe the highest we ever got in 22 on the VIX was 38. We could also get that. You could get them just melt lower. No real massive VIX spike. It could do all types of things.
Yep. So the market's good at doing all types of things. What do you think about it?
You always say that every year we get some once in 100-year event.
Yeah, that's
somewhere.
It's like, how often does a once in 100-year weather event happen? Well, are we looking at Charlotte, North Carolina, or are we looking at the world? And in the world, once 100-year event happens every year. Same with markets. Are we looking at one stock? Are we looking at all of them? Are we looking at the entire market? Typically, once a year, there's a once in 100 year event.
And the data, the data on all this is, and you can splice it up and, make it look however you want. I think it's really good. Historically, when the S&P has done this for the first 2 quarters, then the next, that type of stuff that we see a lot. And we talked about it on here, and it's very interesting. But every year, you'll come across something where, we haven't done this since 1919.
Right. So we just gotta bide our time, wait for new data to come in. What do you think about international stocks? I think this week was kind of fascinating that way.
They've held up better, I would say.
Like emerging markets,
Yeah, emerging markets held up pretty well.
Like, I mean, I know that's an inside week too, but the fact that emerging markets outperformed the S&P this week, I don't know. Is the world really coming to an end? Is
It's
there
not
really
official. I think Brazil was green today.
are, are we really having a massive correction if we're buying emerging market stocks? That's what's happening. We're hiding out in biotech in emerging markets because the market's about to crash. Does that seem logical?
And maybe emerging markets are the new leaders.
Yeah, maybe in a few months we're talking about where EEM is rather than the S&P.
And if EEM came back and retested 85, it wouldn't be the most unhealthy thing. You know, if we're looking at like what does that set you up for the next like 2 years probably, and retested these highs from 07 around 85. Yep. I don't want that. I would complain the whole time if that happened, but it would be healthy.
Mm-hmm. Well, and speaking of zooming out, panning out, looking at EM, like you said, like emerging markets have gone nowhere for over 25 years, 27 years, 28 years, 0% return with heartburn in between. And we're just testing those levels again. We reached them in 2021 and 2007, and here we are again.
Oh, I was looking at EFA. I'm sorry.
That's okay.
EFA came back to 85 or whatever it was. But yeah, international stocks. Yeah, look at that. Look at that. Emerging markets. We'll have to see. Like, what's the big one? Did you say Peru? Peru is big at the mining, right?
Yep. And it's having a similar day to gold miners today. And you just wonder if the consolidation's here for gold and gold miners. But yeah, I mean, I think you bring up a good point about EFA. It broke out to new all-time highs not too long ago. Does it come back and test 85? Emerging markets, near 53, 55 bucks. Definitely possible. That's why we got to use price.
What do you think about the dollar?
Dollar, range bound. And I think maybe markets like that, still sitting below 100, 101. I find it fascinating the dollar is like this, and we've got Bitcoin hovering around the 106, 108 level.
It kind of feels like it's building a little base here. Broken the rate of trend from the highs back in January.
Mm-hmm.
So we'll see. Yeah, we got to get back above 101, 100, 101 for this to mean anything. Maybe that's all we do. We go back to 101. That's what gets everyone spooked. Because it has been a move. I mean, if we spent, right, so we've been under 101 since April. I mean, if we consolidated for a year and then went lower, maybe, again, I don't know. Maybe that's where your short-term gold weakness comes from. Because now all of a sudden we get scared about the dollar.
Treasury's holding up okay. Now, long-term treasuries, 20-plus year treasuries, still sitting in a range that goes back to September 23. I don't want to make it sound like it's in a new uptrend. But if it's carving out a base here, that would be interesting for interest rates if they were to roll over. Definitely a possibility.
And lowest since March, 4.6 on the 30-year treasury.
And, during our education event this with clients, we touched base on, we talked about gold, but also just fiat debasement, which is a funny term, but you look at gold across all currencies and it's doing well. Yes, we've had today's a little bit of a pullback, but you do wonder what this looks like, or as we talked about to start the podcast, is the opportunity cost too high right now? Is the edge gone in gold, especially considering some of the sentiment out there, magazine covers, texts, clients, things on X? We'll see.
Maybe they're putting that in my For You feed to spook me.
Yeah,
trying to shake me out, Dave.
Mm-hmm. And we got oil sitting at 56 bucks, 57 bucks.
Wow. That's cheap.
That is cheap.
This has also been 56, 57. Pretty solid area.
We've seen buying here before. So we'll see. Plenty to unveil in the weeks ahead, but we definitely have that October volatility worth paying attention to. Some pullback in some of the more high-flying areas like quantum stocks. We still have negative breadth. Recent price action pulled in some volume. some negative survey sentiment, not necessarily expressed through the put call ratio. Regional banks on the ropes, sitting here wondering if gold is going to pan out. What you found is the origin of that idiom, right? Comes from gold rush times.
Yeah, the old gold rush out west.
Mm-hmm.
If you found gold in your pan, they said that it panned out.
Did you bring that idiom up at the table? I know you like to cover some interesting facts at the dinner table with your fam. Do you use that one yet?
No. It's been on so Connor's in this thing where he wants like a joke. He wants us to write a joke on a Post-it note.
6-7.
He did another 6-7 joke last night. So ridiculous. Kids, man. Brain rot. I don't even know. He doesn't even watch that. It's the kids at school and their older siblings.
Yep.
Sorry, what was your... Oh, yeah. No, I did not bring it up. He's been into jokes. He wants jokes that he can take to school and share with his friends.
So you have to write jokes on the spot at the dinner table.
Yeah, one of his favorites is why does the butterfly not like basketball?
Because it's too heavy.
Because he's scared of the net.
See,
he likes that stuff.
That's good.
We need more good, clean humor.
Yes.
Like that.
So do you write your own stuff or do you do a little research to get ready for dinner?
It.
Yeah. Good man. Good dad. He thinks you're a genius.
He does.
It's amazing. I just wish you could be a fly on the wall, listening to him tell the joke at school.
I know. That would be fun. God, I bet they laugh so loud at that stuff.
Too funny. Well, if you would let me, I'm going to go ahead and highlight the supporter of this podcast, the Adaptive Select ETF, which is listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADV is distributed by Quasar Distributors, LLC. If we were a true bona fide, and I think we are, podcast, shouldn't we be doing the commercial at the beginning? Not sure. I always think about that. But maybe our listeners appreciate.
We got to market to people before they get tired of listening to us.
That's right. But anything else you want to cover before we close this one down?
No, I just want you to have a great weekend.
Oh, thanks, man. I want you to have a great weekend too.
You soccer?
Yep.
Traveling?
Down to Chicago for Ava. Should be a good game. She's dealing with a bum ankle, so we'll see how she can roll. But it'll be good.
You playing the Fibs? No offense to our Illinois listeners.
None at all. None at all. With that, we do ask our listeners to share this podcast with their friends and family and give us a high ranking of their choice. And Ian, great to be back on here again. I hope you come with a great joke to the table tonight. Thanks for doing this with me.
Yeah. Another week in the books. Have a great weekend, everyone.